Einstein is reputed to have said that compound interest is the eighth wonder of the world or something like that. And it goes back to that story you probably learned when you were in grade school where somebody did something for the king and the king said, "What can I do for you?" And he said, "Well, let's take a chessboard and put one kernel of wheat on the first square and then double it on the second and double it on the third." And the king readily agreed to it. And by the time he figured out what 2 to the 64th amounted to, he was giving away the entire kingdom. So it's a pretty simple concept, but over time, it accomplishes extraordinary things.
Hey YouTube, it's CryptoOneStop coming to you guys from the Crypto Cave. Today we're going to be reviewing the BTC lending rates across multiple platforms. Then we'll transition over to talking about the lending rates of USD stablecoin. I've personally used all the platforms here except for BLOCKFI. I recently made an account with BLOCKFI. I'm thinking about trying them out. Unlike the other platforms, BLOCKFI does offer you a compounded rate, and it compounds on a monthly basis, and so that makes it a little bit appealing to me. The other platforms, they're not compounded, but there are ways to sort of achieve compounded interest, and I'll show you guys in a future video how to accomplish that. Now, BLOCKFI does impose limits. You can only put 0.5 to 10 Bitcoins to be eligible for the higher rate of 6.2%. Anything above 10, you get 2.2%. And anything below, obviously, you wouldn't be eligible to earn interest. Now, I do think the withdrawal limits are a plus because unlike the other platforms, which could be vulnerable to run-in, like a bank run or a crypto run where people just go in and remove all their assets off the platform, with the imposition of these withdrawal limits, I think BLOCKFI is less vulnerable to that and therefore a more sustainable model. Also, BLOCKFI doesn't have a token, a native token like some of the other platforms. And so there's no way for you to earn a bonus interest like there is with Celsius, Crypto.com, Bitrue, all those three platforms. Depending on how many tokens you hold, you get bonus interest on the crypto that you lend out. Now that stablecoin rate for Gemini dollar, that's pretty competitive, and the fact that it's compounded makes it even more appealing. Now, again, the downside of this platform is that it doesn't have a minimum, so you have to put at least $2,500 to be eligible for that 8.6%. And I want to emphasize that there is no bonus, but this is the rate that everybody gets. So unlike some of the other platforms where you do get a bonus, and in some cases to even get 8%, you have to buy a certain number of the native tokens, the utility tokens issued by that platform, to be eligible for those higher rates. With BLOCKFI, you don't get a bonus, but then again, you don't have to buy tokens to be eligible for any of the rates that you see here. In my view, it's a pretty solid platform. I think I'll create a video in the future. I'm going to create an account just to catalog my progress for the purpose of issuing videos in the future, so you guys can follow along and track my progress and get an idea for what the platform is like. For some of you folks that may not have some of the amounts listed here, the minimums listed here, you're probably better off going to the other platforms where there isn't any minimums that are imposed on users. To make it easier for you guys, I've consolidated all the links to the platforms down below in the description. Also, some of the platforms offer sign-in bonuses if you use my referral link, so check them out if you're interested in signing up in any of the platforms that I present to you guys today. Next, we'll talk about Crypto.com, which is quickly becoming one of my more favorite platforms to use. They just unveiled Earn 3.0. Before, you could earn the higher rates by staking 50 or more MCO tokens. Today, it's actually 500 or more. So if you look at the rates without staking 500 MCO tokens, they're actually still pretty good. Getting 6%, let's say, on Bitcoin is pretty respectable. You guys saw that you were getting something comparable with BLOCKFI. But unlike BLOCKFI, to get that higher rate without staking, you still have to lock in your tokens for at least 3 months. The flexible rates enable you to take out your crypto anytime that you please, but to get the higher rates, you do have to keep them in for 3 months. And if you're a long-term investor like myself, you're probably going to opt to do the 3-month period anyway. I sometimes do use flexible, but that's only when I see distortions in the market. If I see something overbought and I think that it's likely to go down, what I'll do is I'll sell some of it, put the USD in the flexible account, allow it to earn a little bit of interest until the token I sold goes down lower and I feel like it's oversold. So basically, I use it to earn interest when I'm doing a little bit of swing trading. Now, if you stake 500 MCO tokens, you are eligible for a card that gives you 3% cash back on all your purchases, and the cash back earned is an MCO token. But aside from that bonus that you get with the card, you also are eligible to receive the higher rates. You can see that for, let's say, Bitcoin, and by the way, these are the coins that they support down here. Let's say for Bitcoin, you lock it up for 3 months, 8% is pretty high. In fact, I believe that's one of the highest rates that's out there. And for your stablecoin, you get up to 12%. And that just beats out everybody. Crow here, I'm not going to get into in this video. It's a long topic. But you can see here the rates are pretty high for Crow, and I think a lot of that comes out of their treasury because they essentially minted all these coins, created them out of thin air. And I believe there's 100 billion in total supply with no max on the total supply. So in this video, we're going to stay away from talking about Crow. Their support for stablecoins is pretty robust. I mean, they support 5 here, including DAI. So you can get up to 12% if you stake MCO tokens. And the MCO tokens that you stake, and the MCO tokens that you're staking, let's say you decide to stake 500, you get 8% on the tokens that you're staking as well. Now, another downside, aside from locking it in for 3 months, is that the rate is not compounded. However, the rates that you do earn, the interest that you do earn goes into your wallet and immediately becomes spendable. And you can use the credit card that you get in the mail to spend the interest that you earn. Another potential downside is the sustainability of the platform. These rates are really high. I'm wondering how they're able to support these high rates. Who knows how long these high rates are going to last and when they're going to decide to change them, because they could change your rates at any time for any reason. But aside from the cons, there are a lot of pros, as I mentioned. I mean, just the high rates are a huge perk to using the platform, and these rates are probably highest in the market that I've seen. Given that my time is limited today, I'm going to go ahead and turn this into a 2 to 3 part series. Now, before I end the video, I just wanted to say earning interest on a deflationary currency is huge. Imagine if you bought gold 30 years ago, and let's say you dollar cost averaged in on a weekly basis. You put $100 in every week, no matter what the price, and you were able to lend it out and earn 3 to 8% interest. Gold by itself has outperformed the S&P. Now imagine earning interest on it, earning compound interest on it. It probably would have been the best investment anybody could have made. So with Bitcoin, I mean, there's no guarantee that it's going to be the new store of value or that it's going to become the global reserve currency, even though I think personally it's on that trajectory. But let's say there is a chance and it's able to dethrone gold and then one day become the global reserve currency, dethroning the dollar. In that scenario, in that outcome, buying Bitcoin today, even $100 a week and lending it out on one of these platforms is going to be perceived in the future as one of the best investments that you could have made. Not only is Bitcoin going up on an annual basis, but you're also earning interest in it. So your dollar cost averaging into Bitcoin, but also the interest is adding to the overall Bitcoin that you own. So you're owning more and more Bitcoin every year, and on top of that, your Bitcoin is worth more every year. Again, all this is contingent upon Bitcoin being here in the next 10 years and being the new store of value or the new global reserve currency. And I know there's a lot of what ifs in that line of thinking, but let's say you firmly believe in that outcome for Bitcoin. The next best thing to do is earn interest on the Bitcoin you own and stack as much as you can. And I can't think of a better way than lending it out and earning passive income and putting your Bitcoin that you own to work. And I know BitConnect put a sour taste in a lot of people's mouth, so people are apprehensive and very cautious about using platforms like Crypto.com and BLOCKFI. But unlike BitConnect, these platforms have CEOs, founders behind them. and their faces are out there. People know who they are. They're on different shows talking about their platform. So I think it's unlikely for them to do an exit scam. Could they do it? They could try, but since we know their faces, I think they'll be less likely to do it. I mean, take a look at what happened with BitConnect and the fallout. People were, out looking for blood. And if any of these people actually showed their face, and let's say they were a public figure, I'm sure their life would have been in danger. So I think they're unlikely to do an exit scam. The real question here is, are these platforms sustainable? I mean, how long can MCO pay out 12% interest on the USD stablecoins that you hold on the platform? Personally, I think they got a good chance of being sustainable. I'm not sure if they're going to be able to offer the same rates because, market forces are in play. This is all based on supply and demand. So if in the future the demand for loans issued in USD stablecoins diminishes, then the rates are also going to go down as well. But because they're making adjustments constantly, it makes me think that they're basically responding to market conditions. And when they're not able to fulfill that interest rate that they promise, they bring it down or they make adjustments. I mean, take Celsius, for example. Originally, they started off around 6% for stable coins, and then they bumped it up to 8%. And if you look at MCO, before you had to have a minimum of 50 tokens to get the higher rates. Now you need a minimum of 500. So the platforms are adjusting the rates that they're giving and also the incentive models underpinning the rates. Now, I'm going to end this video by showing you guys another clip of Warren Buffett, basically illustrating how powerful compound interest really is. So with that, I'm going to let you guys go. You guys have a good weekend. This is CryptoOneStop signing out. I'll see you folks next time. Bye.
Let me give you a figure that'll blow your mind, I think. I bought my first stock when I was 11 years old. It was the first quarter of 1942, shortly after Pearl Harbor. I spent $114.75. Three shares, $114.75. If I put that 114 into the S&P 500 at that time and reinvested the dividends, think of a figure as to what it would be worth today.
Oh man.
Well, it's
okay.
I just want your audience to think for a second.
Okay.
The answer is about $400,000.
Oh.
So if I, as a little kid, had taken that $114 I'd saved on shoveling snow or whatever I'd done, $400,000 today, one person's life.